All right, so we are going to get into the latest episode of Market Mondays by Earn Your Leisure. We're going to get into the stocks. It's headlined as Bitcoin is back, and there's a market correction next. There's some talk on Nvidia, but let's jump into it, and then we'll clarify anything that doesn't make sense or touch on anything that comes up. So I'll try and fast forward through the stuff that aren't relevant, especially to us. Let's go.
Yeah.
We are back. Microphone check.
Oh man, tell them don't address their screens.
All right, so they're going to talk about how Shadi isn't, or Rashad isn't in there. Apparently, there were some flight issues that happened, so it's not like he had a rough week because there's the whole backlash from InvestFest the week before. He addressed it, and then he's not here this week, so people are probably thinking he took a timeout or they gave him a timeout. But as the owner, that doesn't happen. So they're just little quick banter that he's not there due to flight issues. There isn't any turmoil or any backlash from some of the statements that he made. So we can skip through that.
Shout out to my brother Shadi. He on the brand, which he'll be back for black. Getting their opinions off, holding each other.
Only like moderate, but give is rigged. I think if you are a black person in this country, you can see through the veil of a couple of these stances. Capitalism, even with socialism, the billionaires will say that they don't believe in socialism until it's time to get government contracts.
Mm-hmm.
It's a layered conversation that we're going to have.
You know what? I think it's a progressive conversation, right? Yeah. Because there's a lot of other things that we used to talk about, and to have four educated dudes share their commentary, but to watch people in the comments having their commentary, I think overall as a community, we don't want to be remiss to mention that. All right, to stop with the emotional stuff now.
Yeah, I appreciate it. Therapy session over.
Therapy session. All right, let's jump into it, man. Let's kick it off with the investing fact of the week. What you got?
I'm at 4. Number 1, Trump has disclosed more than 1,000 trades in June, totaling up to 263 million, including Visa, Berkshire Hathaway, MasterCard, and Centus. Those first 3, even though I don't agree with the inside trading, well, he reported it, so it's not inside trading.
Yeah, right,
but the first 3 are great. Ray Dalio.
If you don't know, Trump is the only president to do trades within the stock market, and it's publicly known. And just in June alone, he had 263 million worth of trades, and he did 1,000 trades. I don't think you'll hear Troy probably say that I haven't done 1,000 trades in my life. He by far has done the most trades in out of any president, because most former presidents, if not all former presidents, didn't do any trades. Trump is killing it, and as a president, you kind of think, okay, he has the ability with his power to change the market. Like the tariffs happening, he could easily manipulate the market. It's not, I mean, allegedly, he's not forthright saying it, but if I throw tariffs, that historically will put a dent into the stock market, and then that's the best opportunity to buy stocks. And then let's say I canceled the tariffs tomorrow, then the stocks would go back up, and then I've just made money based off me announcing or making certain moves. Like when he does war or announces war, that impacts the market as well. So he's just trading like crazy. And it's alarming, but it's like, what can be done about it? There's a way, there's loopholes around it, but I think, in my opinion, a person of leadership shouldn't be trading, but that it doesn't even matter because his brother or his son can be privy to that information and then do trading and then break him off as well. So there's no real fix to it, but let's keep it moving.
Has said to sell bonds and buy gold, which I've told you for a long time. The all-weather portfolio has had some issues. The bond coverage, I think, is probably the weakest part of the portfolio, and so I'm glad he's saying this. Treasury may tap $1 trillion cash account to buy bond buybacks. We'll talk about that in a little bit. And the White House has stated that the Trump June trades show no conflict of interest. That's fascinating. Back to you, Troy.
I saw that report this weekend, and it just made me, we covered that. I feel like that was a month ago, maybe a month and a half ago, when we were talking about the historical value of presidents trading equities, and there was zero up until this point. And then we got to the current president, he was at like 3,000, and that was a month ago. To have 1,000 trades in June?
All right, so to keep it moving, Ian does discuss the bond market and how it is scary. So we'll look into what his concerns are and then discuss that as well. So let's skip through that.
What are we seeing? What are we hearing?
Essentially, when you look at the bond market, just think of it as debt. But the thing that's interesting, and I talked about it at InvestFest, we're seeing the decay of securities and financial products go away in our lifetime. Like I remember when my aunts would have CDs and they would get 9 to 13% in a year. And the thought was, well, I don't even really need to invest in the market if I have a CD. Those went away post 2008. So the bond market is supposed to balance out the stock market, stocks and bonds. But now ETFs are the hedge.
All right. So for those who aren't up to date with bonds, so to put in the most simplest terms, imagine the whole country uses a giant piggy bank, which is the bond market, to borrow money. And lately, people who lend to that piggy bank are saying we're nervous, so we want way more allowance interest to lend. So that makes everything that needs a loan, like houses, cars, even companies, cost more. And when that happens fast and everywhere, it can cause trouble. So someone like Ian Dunlap called this being scary. Like bonds aren't as effective. And like he said, bonds were used to balance out stocks. But now it looks like ETFs are the hedge to that bond is what he said. So let's figure out what he meant by that. Okay, so what I'm getting here is, so lately bonds haven't done their old job of going up for at least holding steady when stocks fall. So instead, investors are using certain ETF, especially short-term cash like ETF as buffers, ETFs, and some alternatives as their safety net. So again, with ETFs, they act, so let's say I invest in Apple and Microsoft standalone stocks, then that's the risk that I'm taking. That's the risk level I'm taking with those individual stocks. So if, let's say Apple lays off 1,000 people and that impacts their stocks, then my portfolio takes, let's say I only have Microsoft. Let's say both companies lay off people in the month of August, then all my stocks, my portfolio goes down. Whatever I've invested obviously takes a hit. I lose money depending on how much I've invested and when. Where ETFs, there is a stock or ETF that has Apple, Microsoft, let's say Nvidia, let's say a bunch of, like, there's all these stocks in one. So if one goes down, the rest of the portfolio isn't really impacted as drastic as if you're just investing into that one company. So what Ian's saying is that bonds used to be that part of a portfolio that would kind of stabilize in the event one of your stocks like go down, where now ETFs have that responsibility. And then hedge, what the word hedge means is to protect your portfolio when stocks drop, just like what I said. So that would be called hedging, when the bond or that there's a stock or vehicle that doesn't drastically move your portfolio up or down, because it kind of stabilizes it when a particular stock or a couple of stocks go down. It kind of makes sure that your entire value doesn't plummet with those stocks as well. So let's keep moving
To the bond market. So you have no diversification. The reason why it's scary for me is that the bond market has been down for 6 years, and now we're currently at the 2007 levels for an instrument that's supposed to be protected. So, like, if you have an aunt or a grandma that has never watched Market Mondays or wasn't aware of me talking about this, Like someone tried to tell my mom at the bank a couple of years ago to invest in bonds. She was like, they're no good. And they looked at her like she was crazy. And then the conversation started to happen amongst the bankers in a 6-month or a year period that maybe we should stop offering these to our clients because they're not going up anytime soon. So to see, this is like the brakes of the economy going away. And for them to say, okay, now we're going to tap this $1 trillion account, but no one will still. I've asked every guest that has come on, every person I've talked to in Stock Club that I've interviewed, what's the real reason the bond market is going down? No one has a clear answer. This has been down for, imagine if Microsoft had been down for 6 years straight.
All right, so to answer, he says he's been asking people why the bonds price. Maybe it's insiders he's asking, but from what I've gathered, bond prices have fallen and yields have risen because investors are demanding higher returns to lend money to government and companies amid a mix of inflation worries, heavy borrowing, and extra uncertainty. So if they can't match it, especially with Trump, he said it's been happening for 6 to 7 years now. So it looks like the amount that they're looking to borrow or put in, they're not seeing a good return or a good rate of return on the investment. So if there's not a lot of people buying, then it's going to go down. Inflation and oil prices, we've had oil above $90 and renewed inflation fears. Of course, government deficits and debt supply. Investors are asking for extra compensation, a higher term premium for holding long dated bonds because of uncertainty about future rates, debt sustainability, and policy. Corporate AI borrowing wave. Tech companies are issuing a huge amount of corporate bonds to fund AI buildouts, competing with treasuries for investor dollars and adding to the supply glut. Fed policy uncertainty. Bond prices and yields move in opposite directions. When new bonds must offer higher yields, older bonds with lower coupons become less attractive. So their process drops until their effective yield matches the market. So it looks like people just aren't buying how they used to when it comes to bonds. So yeah, I can see where Ian's coming from. It's not really crystal cut clear. What can be the return on investment, or why can't a better rate be offered? Let's see. Why can't a higher return be offered? A higher return is being offered. That's why the rising yield means. But the price of existing bonds has to fall to make that happen. So imagine a bond is like a gift card that pays you $4 every year. If new gift cards start paying $5, nobody wants the old $4 one unless its price drops. When the price of the old bond drops enough, its effective return yield goes up to match the new $5 card. So the higher return shows up as a lower price today. Okay. So the price point to get in is too low. And if we go back to the gift card analogy, if you're getting $4 every year, but then this one, let's say it's the same price, but I'm getting $5 every year, I'm just going to switch to that, whether it's stock, bond, whatever it is, rather than the $4. So it's just not paying out yearly like it used to.
It would be blood on the streets. So I think it's an issue that needs to be addressed. And with the spending, I mean, we're looking at the national debt being at 42 trillion, and maybe by the top of next year, something has to be done. And I think this measure.
And speaking of debt, so yes, the U.S. is, if not approaching, they're at 42 trillion. And Canada is not as high. The Canadian national debt is 1.1 trillion Canadian. And is projected to reach over 2.4 trillion. The last time Canada was in the blacks or positive, I would say, was in the 1800s. So any hope of it getting back into positive or in the black, it's not going to happen. But to see the states are in 40, I think it was 42 trillion. 40 trillion. It's already past 40 trillion, so that's crazy.
It's a little bit too little too late. What do you think?
Yeah, I mean, we watched it today, and it felt like last week when he spoke, Lutnick spoke, it was, and we saw the market respond in a positive way.
I couldn't get the name. He said Lutney. I tried looking up who he is and what he spoke. Let's see, Gluttony. Stocks, bonds. Yeah, I couldn't get it. So I'm not too sure who he's talking about there.
Mm-hmm. And he got on this morning, and it kind of, it was, I feel like the strategies that they're using are becoming redundant and less effective. Mm-hmm. And by that, I mean, right, 1 week to the next, the reaction was different.
Yeah.
We watched what, the tariffs did, and that we're going to suspend them, and the response that happened with that. We've seen the Iran, hey, we're coming to a peace deal, and maybe we're not, we're going to extend this. The more you use these tactics, the less efficient they become. And so at a certain point, there's no more tactics you can use. And we're going to have to face a real world scenario.
Yeah.
And I don't know what that is, but in my mind, I keep hearing you say the bond market's in shambles and nobody's saying shit. That's all I keep hearing when I hear this.
And no one
is that day now coming?
I think so, because now if you look internationally, you're trying to force countries to take on our bonds, and they're like, why would this is like the Big Short all over again? Except instead of the housing market being broken, the bond market is being broken. And then even for Trump to say, well, the bond market is safe because we have warships. I'm like, you can't bomb them into buying a financial product. It sounds good, but even to have to go to brute force for a financial instrument tells me something's wrong. Something is deeply broken that they need to fix soon. And I don't know if they will.
I'm not sure if they will. I think if you've watched the history of, especially if you look at it was great. I saw the statistic was every Republican president over the past 20 years. Mm-hmm. If you look at what the national debt has gone, it's risen under every Republican president. Mm-hmm. And we're under that regime for the next 2.5 years. And so I would imagine that the debt is going to continue to rise. And so now how do we combat that? Right? Like you're putting Lutnick and you're putting our new Fed chair in a very peculiar spot.
So he said Glutnick, I think. This is Howard Lutnick. He's a government official, part of the Republican Party, United States Secretary of Commerce. Okay. They have a net worth at $7.3 billion. Damn. So late to Melissa. He actually had something to say about the tariffs. So Prime Minister Mark Carney, Howard Lutnick pushed for harsher terms than his own country's chief negotiator, derailing a tentative Canada-U.S. trade deal less than an hour before Friday's deadline. Sources with knowledge of the talks said to the New York Times and Globe and Mail, Prime Minister Mark Carney has cast his decision to walk away as a defense of Canadian sovereignty, but some analysts argued the rejected bargain, which would have cut steel, aluminum, and auto tariffs while preserving most of Canada's tariffs-free access to American market, may have been better than the escalating trade war that replaced it. The breakdown has plunged Canada's most important trading relationship. Trump has since imposed, Sources said Lutnick worked to sink the agreement because he judged it insufficiently tough on Canada, with the White House trade advisor Peter Navarro backing his position in American industries, lobbying to keep barriers against Canadian competitors. U.S. Trade Representative Jameson Greer, who led the American side and with whom Canada believed it had struck the Tuesday agreement, instead blamed new Canadian demands and reversals, while Greer is statutorily responsible for the trade negotiations. Lutnick's department administers the sectoral tariffs imposed under Section 232. Trump has given him broad authority over the trade policy. Lutnick's late demands sank Canada-U.S. trade deal that analysts say beat the alternative. All right, so he had a hand in the whole tariff wars going.
And they both, right? And those guys both used to work together. Shout out to my man Champ. I'm sure he sent it to you as well.
Yeah.
They come from the drunken military, right? And he's that two of his greatest proteges are now pretty much the people who are in control of the United States economy. We could say that.
And their hands are tied behind their back, and also and I'm not just beating up on Trump because, MAGA and all that, but when you have a person who leads financially the way that he does and everything ends up in bankruptcy, Novogratz told us this will happen. Novogratz came on and told us, hey, he's traditionally been a spender. I don't see the debt going down under his regime, and here we are. Then we can talk about
Novogratz, I believe. I'm not too sure who he is, but they've mentioned his name a few times. So let's find out who he is. Michael Novogratz was born, blah, blah, blah. He's an American investor, co-founder, and former president of Fortress Investment Group, where he was also CIO of the Fortress Macro Fund. He's the founder and CEO of Galaxy Digital, which focuses on investments in cryptocurrency. So this is Michael Novogratz. And for giggles, let's find out his net worth. I'm a pocket watcher. 5.2 billion. He's an American investor. So this is what he had to say about Trump.
About Project 2025. Some of that stuff is getting scary. And I'll say for the next couple weeks, ease up on the ground beef. Remember when they told Rashad, pause.
You gotta pause that.
So y'all gonna be eating horses. Pause. So I just think it's interesting to see the state of the economy. And I talked about it on Stock Club. Like the crash that everyone needs to worry about is the crash of the economy. But the S&P and the Qs, they're going to do incredibly fine because you need somewhere to place the money. And now it's almost as if the selection of investments is really down to 20 things in the world, and the money has to be parked somewhere. So they figured out a way how to stop a stock market crash from happening, but an economic one won't be stopped anytime soon.
All right, so that brings us to our next piece, which is interesting because we've been saying it for years, right? When we see midterm years, traditionally the S&P, the Dow, the Nasdaq have had negative years, right? Especially in the midterm section. This year has been kind of tricky. I'll be honest. We've been.
So on this part, they discussed the volatility in the stock market, usually happening in September and midterms elections, and how to go into them and what happens next. So Ian had advised that post midterms historically has always done well. However, the midterms this year is different. He mentioned that U.S. stocks fell between July 17th and 29th, which included the S&P 500, NASDAQ, Dow Jones. That was just a 13-day fall, but Ian advises that it's usually a 14 to 15 days, up to a month, even up to 2 months. But this was only a 13-day drop where all U.S. stocks were impacted. And we're seeing that people are looking at dips as buying opportunities, causing it to jump back up faster than historically. And also for the first time in history, we have a president publicly urging people to buy stocks and crypto, so that helps the market as well.
Covering it for every month, every week, which feels like it just feels very different. We thought the second half of 2026 might be a little volatile. It happened early in July, which is traditionally a great month. August, I mean, we're at the 24th of August, and usually we see a lot more volatility. We're seeing some, but it still is trending positive. Volatility usually hits us in September. We'll see.
Yeah.
What's your thoughts around midterm elections, how we go into them, which we'll find out who is taking the new seat or who's retaining their seat in early November, and then what happens post midterm elections?
I think post midterms is probably the easiest to answer. I think historically, post has always done well, and I think post this midterm election, the market is going to do incredibly well. This midterm is different because the crashes are lasting a lot less. So we started to fall July 17th. We fell up until the 29th of July, and then we took off to the races. Normally that rut or that drought would last the entire month or 14, 15 days. We're not seeing that. And I was expressing to Stock Club Call, like any crash that we get now, they're not lasting as long as they used to. We used to get a 2-month down cycle. I think the retail trader who is like almost as good enough to work at a fund, it's a lot of them there. I think for the first time in history, the most $1 million accounts on the retail side are present on brokerages. So there's a lot of great traders, a lot of great investors. I know we played our part in that, but I think people are taking these opportunities to buy these dips and seeing tremendous upside, and the buying power is just so high that we're not having a normal cycle. Also, for the first time in history, you have a president go on TV and say, buy stocks.
buy stocks, buy crypto.
That helps a hell of a lot. And you can argue and say the days that he told you to buy them, you can get really good returns on the days that he bought them. Now, you can argue that it's not right, and I would agree. But I think once we look at the record books and in history books, we have to factor in that he is manipulating the market to tell people to buy. So, allegedly. Thank you. Yes.
You know what? I feel like history might be being rewritten in real time. And it's interesting when they, so specifically Bitcoin has had an amazing 3 or 4 days here recently. And obviously we heard about the Clarity Act and the September 15th deadline. Circle that on your calendar. So, whether that's going to improve, all signs of that it will be. You saw Coinbase, MicroStrategy. You saw the cryptocurrency space move a little bit. And when I looked at the crypto cycle and having conversations, and shout out to Austin, usually the third year is the strongest year in the Bitcoin cycle. But last year was the first time that the third year, going into it was in decline. And so, okay, now we're rewriting history, right? So what does history look like now? So I'm starting to think about the market in itself. And, we're going into it, we think to ourselves, midterm year should be a negative year. But statistics are showing us differently. We did that first 5 days of trading. Right. And we saw that was positive. And usually that means it's going to be positive. And then you go into June, and this was the height, June 22nd through the 25th. This is the height of the memory trade. And we start to see that get peeled back July into late July. Even today, it got beat down pretty significantly. And you're saying to yourself, well, what's different? Well, a couple things are different. Number one, the elected officials are a lot different.
Senior Trump and
right.
Yeah.
The Fed chair has now changed.
Yes.
Right. Interest rates haven't moved. Right. There was a thought that they potentially could rise. There's talk now that he might not even do anything till November. What's also changed is that we're seeing $1 trillion IPOs. And that new for this economy, for sure. We've never seen $1 trillion IPO. We've seen SpaceX do it now. We're looking at probably by next week, right? They're talking about Anthropic could potentially be at a $2 trillion valuation.
And if anyone has earned it, it's them, for sure.
$2 trillion valuation, which puts us in the top 10 most valuable companies in the world.
Yeah.
These things we've never seen before. And so we're watching this happen in real time. When we watch SpaceX pass hold up period number 1, and shoot up $30. Wait, hold on. Wait. More stocks available. People are buying. We saw a lockup period number 2 expire last week. Didn't really shift the company in the way we thought it would. And so there's money out there. People are buying shares. You add that into the cycle of what we're talking about, and we'll talk about NVIDIA. We'll talk memory. And, Tim Cook put out a statement about how, Micron is a company that we believe in and we're going to stay strong with. There's an inverse that's happened, right? These hyperscalers, specifically Apple, used to say, hey, we're going to go to the best price because we have brand recognition and we have brand loyalty. Now that they're looking at their customers and they're saying, wait, you guys are dictating the price to us? History is getting rewritten in real time. These cyclical sectors.
Is that because of the administration and the engineering that he's done?
Yes.
Okay.
That's why I was landing.
Yeah. Okay.
I'm landing there, right? Because the cyclical idea of memory, right, from the early 2000s, and a lot of people who are from that investing world, they remember when it was like, hey, once they have enough computers and they can put them in, what will we do with memory? And now that mindset has to change.
Yeah, it has to shift.
It has to shift because now it's like 5-year partnerships, 10-year partnerships across the board. But the biggest piece is that this space is going to be dominated. And that goes back to the leadership of the country, right? When they were talking about making quote unquote great again, yeah, you can personalize that and you can attach emotional feeling to that, but they're looking at it from a business standpoint. Who's going to be our American leader in memory? Who's going to be our American leader in compute? Who's going to be our American leader in energy? Who's going to be our American leader in infrastructure? And those lines are painted very clearly. Who's going to be our American leader in manufacturing, in packaging? And if they're not American, we're bringing them here, i.e. Taiwan Semiconductor, right? So that history is being rewritten in real time, which makes it tough to follow the pattern. Because yes, history doesn't repeat itself, but it sure leaves some very, very clear clues. I feel like it's changing a little bit in front of us and we have to adjust with it.
I agree. I think there has been some engineering done for his benefit and for his family and his family trust. I wonder if when he's out of office, will the midterm route continue? Also, too, if I'm going to be very frank, I think it's a blip on the radar. I think there's some things that he's done well. I think the idea of Make America Great Again was a great initiative, but he's never going, like Gary is day 13 without power. Memphis doesn't have power. So there's a lot of infrastructure things that we need to address. But when he says Make America Great Again, I think he's talking about his and his associates only.
Yes.
Because if you're trying to make the country great, you wouldn't have this job crisis, housing crisis that is going on right now, as well. Like for me being here in Houston, like what's the stat? 1 in 4 homes and so in America are in Texas and in Florida, 2 states that hold just 17% of the nation's homes. Like there's a bunch of mini economic infarctions that are happening that no one wants to talk about. The bond market being one, the housing pricing issue being one, inflation being another. So I agree there's some good that has been done, but as a result, as a whole.
Yeah. So I want to compute the two things, right? There's the social piece and there's the business piece, and those two things, right? And I'm glad that you brought up Gary, Indiana, because last week's episode, I mean, you were the first person to tell me about it. And when you sent that to me, I said I didn't hear anything about it, but it brought up a lot of conversations around suppressing media, suppressing algorithms, and suppressing our community from the vital things that they need. Right. Yeah. And deserve to have. And so shout out. I saw Keith Lee is out there.
Yeah. Shout out Keith Lee.
Him.
Trade the Truth.
Trade the Truth was out there. Obviously, we've had some conversations on how we're going to make sure that we can help the people of Gary, Indiana, for sure. It is. I mean, for American City to be in this condition for this amount of days without any national coverage
is insane.
It's insane. But like I said, man, if all we got is us, cool. Then we know that because all we need is us. Yeah. So we got to make sure that we come together for each other.
Yeah, we definitely take care of us. No matter what the interwebs say. And the surrounding areas, East Chicago, Hammond, Portage. Hey, because some of y'all getting on the and Lord around, and even in the aid that he sent allegedly has not made it.
And definitely, shout out to Gary, Indiana, through the crisis that they're going through. Hopefully, there can be. It's not really. I don't see any emphasis on what's happening in there, which is sad. But hopefully, the help that they need to get back on their feet is given, and that's amplified, especially through social media, the news, to get them the help that they need.
To the city yet. So even at like there's an information gap. They own the real estate.
But I heard you want to get in front of these charts, man. You want to get to some chart work?
Yeah, I want to do a couple. If we can pull up this McDonald's chart, because I think this is really, really fascinating. Even though McDonald's is one of my favorites, right? And everyone knows the famous story if you've seen the movie The Founder. They own the real estate. The business is doing well. There's some allegations about sourcing of material. I won't cover that. But it's below this 200 EMA. But if you look at the operations of the business, Mike, if we can go to the next slide about McDonald's. The business is strong. That's the interesting point in the retail space. And I was going over this with Red Panda. When I look at McDonald's, Cava, let's say Subway, Chick-fil-A, even though they're not publicly traded, Burger King, that sector of the market, that gives you an assessment for how the overall economy is doing. One of the best things you can do is go in and just talk to the manager and ask how month-over-month sales are. It's one of my favorite activities to do. Just casually. Right. Once you do that, go ahead.
Now I'm saying, if I'm looking at these charts, right? I'm gonna go back. Let's go back one chart. I'm gonna go back to one chart. I'm looking at this. It's hitting the 200-day. We've seen it bounce.
It's under
before, and now it's going under the 200-day EMA.
And that's when I would get concerned when I start to see one or two weekly or monthly candles being formed underneath the 200.
And that's why we talked about it last week. Yes, it can go under its EMA. The key thing, right? Some people just watch to see if it goes under. I think that the next important piece is, or metric is, when does it reclaim it?
Yes. When does it start to breach? And if we're just looking clearly at this, 2020 was different because it was COVID. So I get that. 2023, okay, you had a bounce down, it touched it, it kissed it, it went back up. But also, if you look 1, 2, 3, 4, that's a quintuple top.
Yeah.
Also, I'm seeing it won't break that high. And if it does, it's barely breaking it by $10 or $11. Once you get through a high, I want it to clear 15, 20, 30, 40, or $50, as you've seen with Micron, Nvidia back in the day, AMD, Lilly. Like once those old highs get cleared, it's almost off to the moon. These are slumping down. I won't show the Nike chart because I think everyone's seen that.
We let up on them.
For sure. Restoration. But my thing is with McDonald's, even though the business is great, it's underneath the 200-day moving average, which tells me there's economic weakness, and you have to be very careful how you attack them Cava, Chipotle, that don't have a lot of free cash flow and that don't have a tremendous moat. You have to be very careful.
Yeah, I think there's two distinctions that need to be made when you see charts like that. For sure, is it a good investment versus is it a good company?
Yep.
Right, because if you talk about the longevity of a McDonald's in the fast, I guess they would kind of qualify in restaurant / fast casual. Yeah, they I mean, not really, but I mean they are the premier, right? If you're talking about the number of locations throughout the world, it's them, it's Dunkin' and Starbucks maybe.
Yeah,
but there's people are living healthier lifestyles, or at least trying to. When you talk about healthcare coming into this space and GLPs coming in.
All right, let's see what McDonald's is trending, or stock price of McDonald's. I personally wouldn't get into it, but let's see, McDonald's price. Because as they're saying, it's like so 268.10 a share. Let's see how they've been. So it's been on the up and up. Let's see, the biggest. So they went from in 2005, they've gradually gone up. Their peak was 307.14 in April. And as of yesterday, they're at 268.10. I don't know. I mean, when did they first IPO? 1986 at $5 a share. They've gone up 5,000% since. A little up. 268.10. 309.35 back in November 2025. So they were in the 300s up until April. There's just a nosedive. Past month they've been down 95.95%. Past 6 months they've been down 19.86%. This year they've been down 11.59. Okay, so let's keep it going.
Into this space, and now peptides coming into the space, people are making better choices, which is why you see higher fast casuals. When you see the Kavas of the world, you saw Chipotle do it. You've seen some of these other ones come on, Sweet Green coming into the space. There's more optionality. What does that do to a McDonald's? Well, it kind of cuts.
Put some pressure, and also with the economy being so tight, even if you feed a family of 5 at McDonald's, it's gonna run you $60.
Yeah.
Like the days of feeding a family of 4, like when we were growing up, I remember we'll leave practice and it'd be like 10 of us, and we can feed all of us for like $40.
Now we was good, bro. We was good when they dropped the dollar menu. It was over.
Elated. Now
it was good. We got the 4 nuggets and we got the double cheeseburger. That was $2. You got the dollar fry. You out there with a whole meal for $4.
Now, if you have a family of 4 or 5, it's going to run you $40 or $50.
Absolutely. McDonald's is for what it's not even healthy, and now their price is crazy. I remember in high school you could get like for $4 McChicken meal, like the actual, not the junior. You can get like a McChicken meal, medium-sized fries and a Coke for less than $5. Now that's like gonna run you at least $10 to $12. So their price has gone up. I understand they're a real estate play, but their price has gone up and the food is not healthy. So it's like you're paying more to put bad things into you, non-healthy food. So the appeal of McDonald's isn't the same. Like that smell of the fries, I'm not gonna lie to you, always gets me, but you gotta not succumb to your cravings, because you know, I call it that guilt. After you've eaten McDonald's, you're like, why did I just do that to myself? And then you realize what you paid for it. The whole experience isn't worth it. Just at the time when you're ingesting it, it feels amazing, but it's short-lived. But as they're saying, McDonald's is doing its thing from a real estate. They're everywhere. So I think their whole play is not really about the sales. Let's see. I know Subway took them over as the #1 fast food chain, but let's see what is McDonald's. So you see they're not doing good from a stock perspective. McDonald's net worth today, 189.7 billion USD is the market capitalization net worth of McDonald's as of August 2026. McDonald's profits today for an adjusted earning profit or earnings per share of 3.38 for its latest second quarter 2026 results, beating the analyst consensus of 3.32. Total revenue 7.1 billion in Q2, slightly missing the anticipated 7.13. So McDonald's is still making money.
And even same as Chipotle. this higher quality ingredients I get, but one bowl can run you $24 if you're in a major metro area. Like I remember the last time I came out there with Xander, we walked over to Chipotle. Even Xander was like, "Why is this $52?" I'm like, "We're in New York, my brother. Sorry." And Xander said he want credit for calling the bottom of SpaceX.
Please give him his credit in the chat.
Shout to my
Give him his credit.
I'm proud of it.
And all it takes, obviously, there's brand loyalty there, but obviously
sure.
people are making healthier. But what happens when there's an outbreak with lettuce? Or E. coli becomes a scare, right?
Or there's some other outlet.
Well, that's a blackout topic.
But
please.
Even with that, certain things you have to clear up. So people, like if someone was like, "Yo, Ian an Illuminati," and he get all of his data from Molech, I have to come out and say, I'm not going to a demonic aisle to get my prices. I can't let that rumor fly for 14 weeks.
So some things we got to address.
Have some. The Illuminati, yeah, got to address that.
They want my soul and my body.
I won't give it to him. So
McDonald's, strong company, bad investment.
Strong company. I still like it as an investment, but it's one of those where you have to buy it at the right price. If it gets to like $236.84, I love it. No pun intended. But
so there you go. Ian says $236.84, and this is the part that I love about this show. He tells you the right prices to get in, and we just saw that McDonald's was at what was their stock price again? $268.10. So they're not that far along. Of course, never buy at the high, but let's see the price.
But the company is have to buy it at the right price. If it gets to like $236.84, I love it.
684.
No pun intended. but the company isn't so great where you can just buy it at any price. I like it at $236.84. It's a slightly broken asset, not to cast any aspersions, but it's kind of like John Morant going to Portland. Like there's still quality there. You just have at the right price. You have to wait to see when you're acquired.
I love John. I
do too.
Yeah, it feels funny him being in Portland. Yeah, I haven't. Admittedly, on this show, like I missed the Chipotle run, which it is what it is. You're not happens being in front of all of them. I did love Kava out of all those. Kava was a part of the portfolio, no longer is, because
Kava. Is that a restaurant? Or Kava? Is he talking? I think it's Kava. Focuses on fresh. Okay, so let's take a look at this Kava. I don't even think we have that in Canada, do we? Kava. Looks like it's U.S. fast casual restaurant chain. Is Kava coming to? It's not announced an official opening date for its fast casual Mediterranean. What is their IPO? Kava Mediterranean IPO. Okay, so they're publicly traded at $69.29 a share. I've never heard of it, and they're not in Canada, but looks like they might they haven't announced that they're going to come here, but let's see what else they have to say.
Number one, why I loved it, fast casual has changed, and it became an alternative. And I love the product. I think the product is amazing.
The product is probably the best of the fast casual.
The product is amazing. But when you talk about where those locations were starting to pop up. A lot of them were happening in that DMV area, and people in government lose jobs. A lot of federal employees lose jobs.
Yeah.
Well, there's going to be a decline in what
trickle down effect.
It's a trickle down effect, right? When Doge hits and people lose jobs at a large scale.
Can we talk about Doge? I don't mean to cut you off, but that.
All right, so we will leave it at that for today. We'll continue off where we're there. So we got 40 minutes in. I'll try and skim through some of the stuff, just get to the things like the price stocks like we got with McDonald's, and then we will go from there tomorrow or the next time I'm on. In terms of news, the last thing I saw was that Canada is in full effect. Carney has hit back with the 50% tariffs on 20 billion worth of US products. So we knew that this was happening. Only thing is, what makes sense right now to get the biggest bang for your buck is just buy Canadian products for now. And then let's see what Trump does after that. And we don't have a wealth genius spotlight today. There was something that I'll save that for another video, but we'll just go through the market Mondays. We'll continue. We'll do part 2 tomorrow. Don't know what the heck this guy's cutting the grass right in front of me. Sorry for the noise, guys, if you can hear that, but I will catch you on the next one. Don't forget to like, comment, and subscribe, and we will do a part 2 on Market Monday.